Welcome to the Trending Tokens podcast with Jake Vale and Jeff Pulver. Jake is a marketing consultant for T0 and consults in the security token space. Jeff Pulver is an internet pioneer known for his work in VoIP and has invested in more than 400 blockchain startups and shares his knowledge through a program called the Pulver Edge. Today, we spend most of the episode discussing our thoughts on what to expect when non-accredited investors begin trading on August 12, 2019 on the Pro Securities ATS, some crowdfunding-oriented raising methods, and the general landscape of the security token ecosystem. All opinions on trending tokens are the opinions of Jake, Jeff, and the guests. Nothing should be taken as legal or trading advice, and the content from this podcast is for informational and educational purposes only. Thank you. All right, Jeff, so what are you heading out to Israel for this week?
Working on some deal flow opportunities. It's the world of digital finance. It's you have to go where the people are, no matter, it's one of those interesting dilemmas you have with technology, that you can use technology to host a meeting, but if you want to make a meeting happen, if you want to close a deal, you have to go where the deal is. So I'm working on a soon to be disclosed, but not yet disclosed reason, but it's all for good, and very, very, very excited about the prospect of what will happen.
That's awesome. We have some exciting stuff coming up this week with T0, opening up to retail trading starting tomorrow. So
is there any estimates in terms of what the expected volume is going to be and how it's going to shift from the time we've seen only just accredited investors to be able to trade, that unaccredited investors can also trade?
I expect that it's going to be kind of a slow transition into having more trading volume, because I think that there's sort of a bottleneck on the side where they're approving the non-accredited accounts. So everyone who's signed up might not be ready to go by tomorrow, or might not have a wire in ready to go tomorrow.
Are there any specific requirements for the unaccredited accounts to trade? Do they have to be U.S., Canadian? Are there any nationalities?
They have to pass the KYC and the normal, whatever the normal. I know that Canada's still not open, and then I think that there's a couple other countries where it's similarly not open. So mostly the United States are the people who are expressing interest right now.
So it's going to be so for U.S. non-accredited investors, and is it only going to be trading on the T0 exchange for now?
Yeah, they'll be on it's the Pro Securities ATS, which is owned by T0, and
interesting.
Dyno is the introducing broker.
Are there other securities that they're going to be onboarding this year, not related to T0, that will also be open to unaccredited investors that once were security tokens only open to accredited investors?
Yeah, I know that the DS protocol from Securitize had been implemented on the T0 side. I believe that everything ends up now on their vetting table to figure out whether or not these businesses pass the diligence that's required to have them listed on the exchange. So I don't know what stage of the process various companies are in, but I do know that Sam had mentioned that the DS protocol implementation had been done probably 2 months ago.
The real challenge is how interesting are those companies. I mean, we understand where T0 is and how being a pioneer in a field makes what they're doing interesting to the whole industry. But just because you have one protocol and another protocol, ultimately, I believe it comes down to the fundamentals of the companies that you're looking to make an investment in, or you're looking to take a chance on. And so I wonder what the fundamentals of those companies are, because just because we're on one protocol doesn't make this company more attractive than another company. I think that there's some other attributes that would lean an investor toward one direction or the other.
I know that at least a few of them are commercial real estate deals. They're the ones that are listed on Open Finance currently.
And do you have any idea where Open Finance's trading volumes are compared to what T0 has been?
It's about 10%, I think, historically.
So Open Finance is 10% of T0?
All Open Finance has traded around 10% of what T0 has traded total. I got to find there's a site that has all this information listed, but I don't have it off the top of my head.
So really, if we were talking about the growth of a child that was born, waiting for it to walk, they're barely crawling right now.
Yeah, I mean, this is like the growth spurt phase of what everyone has been expecting for the last 2 years out of tokens and security tokens, and this is where people are going to start watching and seeing how many new investors are able to come on once it opens up to non-retail or to non-accredited investors.
And I guess that's where the efficiency in the on-ramp process, the efficiency in the KYC process matters, the efficiency in being able to spread the word and of course be interesting. One of the challenges I think that people will live through is that some of this has not been very well orchestrated. For people who are familiar with the original tech bubble, the .com boom from 95 to the year 2000, many, maybe perhaps was the first 25, maybe it was as many as the first 40 .coms that went through the IPO process, were phenomenal runaway successes because everybody in the ecosystem benefited. From the underwriters to the companies to the original investors to those who flipped to those who could flip, everyone did well. And I just wonder, who's going to really do well here? I mean, are we really seeing a frothy ecosystem where people who are taking that tremendous risk up front, investing in a brand new type of digital security, are they the ones who are going to benefit, or are they going to be the pioneers that ultimately get shot with the arrows at the back? And it's the people who come forward because of what they did, that the work that they pioneered, who then will prosper. And any thoughts about that?
I feel like they're locking a lot of people out by having the accreditation requirements. So when companies look at doing like a Reg CF or a A+ or something like that, there's a lot more sort of opportunity, I guess, for normal people to get involved. And maybe accredited investors might be hated investing in the stock market, but not necessarily sophisticated investing in blockchain technologies.
So for those people who are listening to us who don't know what a CF is or a Reg A, Reg A+ is, I remember that CF, let's say someone raised up to $1,070,000 to unaccredited investors. And what are the rules specifically for Reg A or Reg A+?
Reg A+, I think, starts at, I want to say 5 million up to 50 million. And I don't know much about the process. I know that you can run a Reg A+ directly after running a Reg CF. So you could raise your first 1.07 million, and then as long as it takes you to sign over with the SEC and get your business approved for the Reg A+, you could probably be up and running about in 4 or 5 months, I think it takes.
And for the CF, which goes directly to the unaccredited investors, has anyone created a token after the fact so that so a company, let's say, sold 15% of their equity through a CF? Has anyone tokenized their equity post CF? And
so right now, Start Engine has approval for their secondary trading platform, and so a lot of these securities that have been sold historically to the Reg CF crowd or any of their other various investors, because they've done.
Oh, so the question was, first I asked you what the numbers were. Then you were mentioning that Start Engine has approval to provide a secondary marketplace for the approved deals. I was asking about the tokenization of the crowd CF deals.
Yeah, so on the secondary market, I don't know whether those end up trading as tokens. I think it's an alternative trading system that they have approved for the secondary trading. So I'm not sure the structure. I guess it would depend on whether or not the companies were tokenized or had the idea to tokenize when they were doing their offer memorandums. So probably companies that are around 1.5 to 2 years old, I would guess would probably have a tokenized security that could potentially be trading on the Start Engine ATS once it's ready.
So let's just go down this path a little bit, because this is just something I haven't considered before. But if we did a CF, let's say you and I do a company and we do a CF, we raise a full $1,070,000. So we have unaccredited investors that are now part of our ecosystem. Is there any advantage? And Start Engine, you said, is now going to offer a secondary market so that if they invested through that platform, they can now trade their ownership shares to others who want to come in. Does that create a conflict or a competition to others who might want to just tokenize their position and be on a different exchange? I mean, is there, or is this really all the same? Like if there's not,
that's going to be a hot button topic forever, I think, because my guess is that eventually all of these tokens will need to be trading on every possible exchange type.
Right. I mean, so that because if we're just having liquidity on one exchange, we're really not universally available. I mean, people have heard of Bittrex, others have heard of Binance, others have heard of Coinbase, right? And so, if you have a company that's not, because today, in reality, in outside the digital world, let's exit this galaxy, go into the galaxy that's driven by NASDAQ and New York Stock Exchange. If you have a publicly traded company that's a certain market cap and it's trading, take company I started, Vonage, right? So, VG is running on New York Stock Exchange. If someone goes to the broker and says, I'd like to buy 100 shares of Vonage, there's no confusion how to get it. They just get it. And it doesn't matter where their brokerage account is, if it's through any retail establishment in America and many other overseas, they can get a stock that's trading on the New York Stock Exchange. But if we want to buy ABC Co. and ABC Co. is on Start Engine, is there any integration right now where it's ubiquitous so that someone opens up their Fidelity account and says, I want to buy ABC Co.'s something? I think that until we get somewhere close to ubiquity, we're going to have very slow, thin margins, very slow market moving, and that we have to somehow separate the hype from the hyperbole to the reality, and maybe as an industry work together to make this cohesive and make this seamless.
It's funny that question came up at the Start Engine conference. Someone asked it to Howard Marks about the company Nightscope, the security system robots.
Yes.
So that company has done multiple raises, different series of financing, and each one of their tokens trade as a different, like there's the Series E token, there's the Series F token. So they have, it's not even standardized into a single
token. Wow. So what do you think as far as timing goes? So we're in the dawn of 2020. We're going to be, it's August, so we're going to go into the end of the third quarter, going to the fourth quarter. When do you think we're going to start seeing volumes commensurate to the future of where the financial markets will be going? Like, when are we going to see enough people, critical mass, come to the table and say, I want to participate? Because to me, it's not a 2019 thing. 2019 seems to be like the alpha test. And the way it's setting up, it looks like 2020 is maybe the beta test. But
I feel like to get all those bells and whistles that people want on their trading platform, it's going to need to be the National Security Exchange project with Boston Options Exchange. So,
and that was announced. That was announced last year, right? That was announced in 2018.
Yeah, and SOM has pushed out the estimated completion date, I think, to Q1 of 2020 for that project. So, and I believe that was historically looked at as something that would be around this August by the time that the non-accredited investors were trading.
All right, so for people who are just tuning into our podcast here, we're very much inside baseball. If we're talking about baseball, we're talking about the inner workings of what's happening today in real time in the state of digital securities in America, particularly the reality of what it's like to actually have tokenized assets and where and how to trade them and where they're going to trade. We are not providing trading advice. If anything, we're just providing commentary on where things are and how nascent the industry truly, truly is. When you see the Congress, getting together and talking about Facebook and the threat to the future of monetary policy, did anyone at those hearings actually look at how nascent the industry truly was? So at what point do we bridge the gaps between hype and reality?
I think there's got to be some amount of users on an exchange or some amount of daily trading volume, I think, that would make you feel like you've arrived. Maybe if there's 10 tokens trading and they're, having enough liquidity that people could, I don't know, maybe 5% or less of the stock is trading on a daily basis, something like that, might be an early indicator of a successful exchange or a successful project.
And, from my side, I've been looking, and when I've been meeting with entrepreneurs in tech who have really hot companies, soon to be deemed unicorn companies, I've been pitching each of them as they have a chance to say, consider going the digital securities route and be the first company ever not to go public on NASDAQ or New York Stock Exchange, if that was your thinking, but do a token offering and be that first company that goes digital with digital securities and help open the door up for everybody else. And the pushback is, well, we know what we're going to get if we actually go through NASDAQ. We know what we're going to get if we have, and the support we'll get if we go through New York Stock Exchange. What kind of support are we going to get if we actually go 100% digital? And what about our future shareholders? And, there's crickets because, to be those first companies in the door, to have the courage to try that, opens high risk, high opportunity. And I'm still waiting for somebody outside of the industry to come in and say, I love this, I want to be there. And because I believe the future is tokenized securities.
Well, Jeff, did you hear what Overstock is doing with the dividend stock?
That comes under the category of sipping your own champagne.
Yeah, no, I mean, it's the most classic. I expected Elon Musk and Tesla to be calling us and asking us how to do that.
I love the idea. I mean, and for those of you not familiar with it, they're actually issuing a digital dividend, which is brilliant. I just don't want people to think that I'm in love here, but I was smiling ear to ear when I heard that they were actually using. They created a reason, if you will, to prove out the flow. As much as Overstock also, I think, issued a digital. They used their ecosystem a couple of years before T0 came into the flow to show what could be done. Issuing digital dividends, I think, is a great way to drive traffic and a great way to create the process to show how things can be done. It's sheer brilliance from my perspective.
Yeah, it'll be interesting to see. I guess they expect somewhere around 40,000 investors is the total number of people, shareholders owning stock, register to trade their OSTKO shares that'll be issued on September 23rd.
The biggest challenge, though, is re-educating old dogs. The challenge of getting people to change habits, getting people to actually show up at the door, people who actually qualify to receive the dividend. What is going to be the breakage? How many people really show up? How many people do they actually have access to? How many people care enough or know enough to actually come through? I'm a little skeptical about that. Not about the process of what they're doing.
When these guys who are potentially naked shorting, I mean, if they don't come up with stock and don't receive these dividends, they're going to end up owing people dividends that they'll have to go register for the ATS and then buy on an open market.
Really? Are you serious?
Yeah.
Oh my God.
If someone gets caught in a short position, they're going to owe to the person they're borrowing the stock from those digital shares that were issued on that distribution date. And if they don't have those shares, which it wouldn't be possible for them to have without registering for Pro Securities ATS and buying there, they're not going to be able to fill it. It's a crazy genius plan.
It's a pure genius. It's almost like an evil mad genius, but genius nonetheless. And I love it because it will actually hopefully significantly reduce the naked short selling, which is one of the inspirations for T0 to begin with. And unfortunately right now, as far as I understood, it was really trading T+1.
Yeah, I feel like all these things that we have coming up, this combination of the OSTKO dividend being paid out, new registrations for non-accredited investors on T0 trading, and potential up-and-coming security token offerings. T0 has issuance clients that they're working with. So there's companies, I think that they said there's around 10 of them that are in the wings that are the next 10 tokens they expect to be listed. But this is, again, like a Q4 2019 or Q1 2020 sort of idea.
So on the positive side, things are moving, perhaps slower than some of us imagined a year ago, but things are moving forward, and that's a good step. That makes really good sense. And so I'm bullish about the future, but of course I was bullish in 2017. So my timing seems to be off. So in reality, it's going to be like 2021, 2022 before we start to see critical mass, maybe. And that's T0. Is there anyone else in the industry you're familiar with who has the potential to look at T0 and say, great idea, now let's really do it? Or is T0 really the market leader for the time being?
I mean, as far as I understand it, Open Finance is the only thing that's even close to being a competitor. And that's sort of, I mean, they have a different setup and a different plan for the future than what T0 is looking for. I don't think that Coinbase or any of these other companies that are trying to launch US security token exchanges are going to have very much luck doing it if they don't have a giant base of users from day one when they start.
But maybe you've actually pointed out an opportunity. Maybe the opportunity for security tokens is not the US. Maybe it's going to be in jurisdictions which are less strict, where there are countries like Mauritius and Bermuda, which have already been proactively publishing their regulations. So we're not going back in time to 1933, 1934, 1940 and reading tea leaves every time, but really understand where it's at. Do you think that exchanges that perhaps purposely exclude U.S. investors and onboard people from other jurisdictions ultimately could be the winner in the global marketplace and the global race for liquidity?
I would guess on the cryptocurrency side, that's probably the way to dominate the market. I think that Binance is probably, it'll be interesting to see what they come up with for their US version of the trading platform. I mean, I'd expect that they need to ask everyone to KYC and do AML checks and all that kind of stuff, which I know that weren't required initially setting up Binance accounts. So I think a lot of the companies that are in the crypto space are going to have some interesting times dealing with the legal surrounding doing a token offering or having these tokens trade on an exchange.
So for those who need to be U.S. compliant, there is the on-ramp. People who don't need to be U.S. compliant, there may be other related issues. I mean, I believe that, certain countries do not allow its residents to own equity. So, security tokens, I don't think themselves are interesting to people in China today. But overall, I believe 80% of the crypto market is in China. So
yeah,
it's sort of a...
And what you're saying, so for international investors, I think that a lot of the time they would look at it as if an offering is available in the United States, then that offering is doing the most they can from a compliance standpoint. They're trying as hard as they can to fit in. So I think that there's some kind of a benefit to having it be a live offering in the U.S. versus one of those other, different jurisdictions where it might be easier to get something set up, but the potential for a scam might be higher.
So that's what I'm trying to get to. So if it's a U.S. Offering, the belief and the hope is that it's going to be less scammy. That if you're outside the U.S. where the jurisdiction rules might be lax, that you may be more at risk of being taken as for something that you really did not expect to be getting yourself into. And of course, neither one of us are regulatory attorneys. We're not providing any type of advice trading. We're just making observations of where things are at without suggesting one should do one thing or the other, right?
Yeah, definitely no investment advice, no legal advice, had no bar license, have a lot of legal opinions, but no legal advice.
So, it's just, when you look at trending tokens and you look at, trends, I totally get that we're at the, almost at the starting gate for the launch of the security token industry. And it's going to take, I think, more than one active security exchange in America to say the doors are open. Because until then, we're just in trial. We're in some sort of global beta test or alpha test for what's possible.
When the Binance hack happened a couple weeks ago, and Binance shuts down their trading, and then all of a sudden Coinbase has no trading on a couple of their currency pairs, the back ends of these different exchanges are all tied together through APIs. And I think that until we see that in the security token space and people are they just log in and they can trade from T0, they can trade from Open Finance, but it's all sort of the same pool behind the scenes. I think that's when we'll sort of hit a tipping point.
So we're not quite there yet. So while this market is brewing, are there other areas are there any up and coming companies that you're familiar with that have announced they're doing security token deals outside of real estate that are on your radar?
I have spoke with a few companies who are interested in taking the current business that they have. One of them was an identity solution, blockchain stuff, and there's a cybersecurity sort of protecting your data element. And so that company has the current business that's operating, and they're about to be finished with an application. I think that companies that are doing business and operating as if they're not just in this fundraising space are going to be the ones that will be successful.
That's encouraging. I'm also intrigued by the funds which offer investors liquidity through tokens because, typically as an investor, there's a 7-year plus time horizon from the time you put money into a fund to the time you start getting distributions from company exits. And the opportunity to have liquidity as an investor, as an investment in interest has been and continues to be of interest to me. As much as I think from the real estate side, for investors in real estate, tokenization of real estate makes logical sense. But the reality is we don't need a security token exchange to tokenize or to even replicate what a token is. We just need to provide a way for people who are limited partners to be able to sell their shares to other potential qualified partners. And so there are times when being being in the technology field, we kind of sometimes overcomplicate situations that, we don't have a perfect match for everything, but we try to push it into a bucket because it would make everything else look so much cooler.
Yeah, I felt very much
although
like that on the real estate side of things. I didn't see a lot of those deals that seemed like they were any more interesting than, one of those My Rich Uncles or.
more compelling. I mean, we're not changing the economics, right? We're not really like making it so, oh my God, this makes so much sense because. And so there's that. The other thing is that it looks to me the windfall out of all of this right now are going to be security attorneys. The attorneys and everybody directly involved in the underwriting of digital securities look like over the next few years, from the accounting side, from the regulatory side, from the consulting side, that looks to be a boom industry to me. Sort of like this was a new gold rush. These are the people selling the shovels and the picks. And I think you're going to find even more people becoming attorneys because of this. Because I do think that there's a disproportionate amount of knowledge and information, and some people still defining their specialties. But also, let's not forget about the larger international accounting firms that are playing in this space, and then to some lesser extent, maybe some of the large enterprise companies, which are looking for their niche too. And I found interesting was earlier this year there was an announcement from a very large pharmaceutical company, looking to issue a security token to fund a new a potential new drug, where the entire risk was going to be, if you will, off balance sheet by a group of investors, and they would end up with a share of the solution if it was ultimately FDA approved. So that's kind of cool to me that companies could look to actually outsource R&D and outsource some of the future revenue from particular high risk opportunity through digital securities, but that's not today.
It'll be interesting to see how the current overstock investors handle the news about the digital dividend, because I'm sure that quite a few of those people weren't on the earnings call, like they're not following it on a day-to-day basis.
They're not. I mean, overstock has a lot of. If you look at the daily churn on volume, from my interest, my non-industry, I'm not a stockbroker, so I'm not. But I look at the volume, and I think that the biggest challenge a lot of these companies will have is ignorance. That we don't have there. Just like if you're like selling a retail product through a store, if you're manufacturing a widget and you're in distribution, most of the time the end user doesn't have direct access to the manufacturer. It's coming through the retail channel. So the retailer knows who they sold the product to, but the person who bought the product doesn't really have direct contact to the manufacturer unless there's a defect or unless they're doing something. So the idea of registration cards makes sense, because people can register their warranties, and all of a sudden the company can then have a direct access to the customer. In the case of any company doing a digital dividend, there's an assumption that there's going to be direct access from the company to the shareholder, and not through, so we're not going to be decentralized, we'll be centralized. That's great, but today that doesn't exist. Today, more or less, a lot of the shareholders are decentralized, certainly at least from the perspective of getting news and information. And so it's going to be a lot of, imagine a hole that's very, very tiny and 40,000 people trying to get through that hole. It's going to be a challenge to onboard people and to streamline that process and to comply. And they will comply, of course. But I think it's going to be a landslide with a very small hole for the rocks to get through. I think they're going to get upset about how long it takes to onboard, because you might be interested in August, but if you don't get cleared till October, good luck.
Yeah, and so I think that they actually cleared out quite a few of the registrations that had come in between when this ATS launched back in January through now. They were going back through the ones that had come through non-accredited. And then
are they still working through Dino Securities, or are they now doing
Dino's handling all of that onboarding currently. In the future, there'll be more brokers, so it could be a different introducing broker bringing you onto the platform.
But right now, it's still Dino. That's going to be a challenge. I think we have scaling issues, but we'll see. I am, it's one of those cases where a vision leads, and then you have to show up and deliver. And I think that what we have to, someone's gonna have to deal with is that end user frustration. And, there's demand, because you see, if we don't see demand and we don't see frustration, then maybe this was not a good idea. Because it's like, if a tree falls in the woods and no one notices, what do you do?
I'd say that there's 10 non-accredited for every one accredited who might have participated in the security token exchange or offering.
But if you read through the offering, the original white paper for T0, my understanding is that there's that what you get is a cash flow dividend from the profits on the exchange.
Yeah, the
right?
dividend structures, there's a couple different options. Ultimately, it gets chosen by the board of directors for T0. And it's way down the line, I would imagine, once they can start showing, revenue and profitability.
But what I'm saying is in 2019, I don't expect, I don't believe there's revenue. There's going to be significant revenue over expenses in 2019, right? So
very unlikely.
What are people? So what's the real rush? I mean, what's the ultimate demand besides hype?
I think a lot of it is going to be people thinking they can get a better price, like sort of expecting the initial, when a company IPOs, sometimes their stock goes up a little bit, goes down a little bit, but the people that are in there in the first couple of days are the ones who are making a lot of the money. So I feel like a lot of the non-accredited people are trying to figure out how they can be the first ones to get the cheapest tokens, assuming that there's a bunch of people who are ready to sell them on Monday on the other side.
And don't forget, if people are selling and there's no support, I mean, again, go back to IPO market. If you, Jake, were an underwriter, it would not be assumptive to think that you'd be supporting the IPO for a few days, meaning that if people are coming in to sell, you would come in and support the price at a certain price point. Otherwise, it could be a free fall. So if we have too many people looking to sell and not enough people looking to buy, and there is no support, the price could crash.
It's going to be something to keep an eye on. I'll be watching it all day tomorrow.
But I don't think it's just tomorrow. I think it's going to be the whole month.
It's a pretty big thing in the space, which I don't think people are talking about it as much because of the digital dividend issuance. That took all the fire out of the news. But
well, I think the bigger challenge is to T0 file a patent for that.
They just got awarded a patent on the trading between blockchains, the settlement.
I know. So my question is, to T0 or Overstock file a patent on the concept of a digital dividend?
Oh, I don't know. They should have.
Clearly, or you or I should, but by now it's probably way too late.
Did you see that? It was sort of like one of those genius moments, but it's not your moment; it's somebody else's.
I just saw in the news that IBM filed a patent for a blockchain, for web browsing over the blockchain. I have no idea what that means. I have no idea what they even up to, like why. But yeah, patent. But a lot of industries are won and lost by the patents and those who troll them, which is another conversation for another day. I am not in favor of patent trolling. It has killed too many great entrepreneurs' dreams. However, if you got it right and you can maintain a safe space, why not? It's interesting times. I think that we're kind of early. I do hope that if you're looking in the days ahead for that big inflection point to happen, that it truly happens. I am on the sidelines just watching like you. And I think what we're seeing is a version of the future, but it's really, 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 really early in that future unwinding and showing ourselves what can happen. It's a transitional phase. I would like to believe that it's going to matter a lot, and it will, but I think we're months or years before the reality of where this hits actually matters significantly. But the concept of digital dividends, it's here now. I expect other companies who are going to be listed with security tokens to follow suit. It makes sense. Certainly helps maintain brand loyalty, and frankly gives value that they can give, and certainly helps on the T0 side, but it probably helps in other pieces too. I am in awe of the brilliant minds at work that allow these things to happen. I'm concerned about the practical reality of what all this means and how it turns out. And if it doesn't turn out exactly the way it's intended, how it's communicated, because we don't want to discourage people from going digital, but people have rights, and there may be people making noise. And just because someone offers an offering in a digital form doesn't make it the best offering possible, given what's in the market. So it's easy to get excited about people doing offerings, but I wonder, is this a company that I actually like, or do I like it only because it's a digital offering? So, I do think that it's a Darwinian, survival of the fittest comes in every category. And then if you are going to go digital, have the best, be best in your class.
Yeah.
Because just because you're digital doesn't mean that people care. I have a flight. That's right. I need to be leaving soon. So I wanted to check in with you and see where things are at. It's been an interesting summer of 2019. And I figured, before I boarded the flight, I wanted to catch up. So I'm grateful for your time.
Yeah, for sure. Same, Jeff. I always enjoy talking to you. I like hearing what's going on your side of the space, and it's I like relaying everything that's going on in the T0 community out to you guys.
I will mention that for people looking for what's happening in outside of the T0 world and my world, Bermuda is hosting a very special event the week of October 14th. I believe they're having a FinTech Day on the 15th of October, and the 16th and 17th is something called Tech Beach. And there's a lot going on in Bermuda that week. And if anyone's interested in getting connected into the Bermuda FinTech community, while there are lots of people out there available, if they were just to drop me a line, I'd be happy to make an introduction. I'm excited. It's we're living in interesting times when things happening outside of certain borders can drive innovation and change. And so I'm a big fan of that. While at the same time, love to see. I'm actually very excited for us to see what happens when unaccredited investors, for the very first time, can trade on T0.
Yeah, it's going to be wild. Well, Jeff, I hope you have a good flight, buddy, and I guess we will reconvene sometime next week